All right, mic check one, mic check two. If you are watching this live stream back on the replay, take advantage of the chapters and skip ahead to the start of the show. I'm still setting up and giving people time to tune in. Guys, we're going to have an awesome show tonight. Yes, we are. Yes, we are. Yeah, we are covering Netflix. Yes, we is. Yes, we are. It was quite a day in the market today. I'm glad we only got one more day left. Friday is when the truth reveals itself. They play a lot of games between, from my experience, Wednesday and Thursday. If they don't take a little bit from you on Wednesday, they definitely get you on Thursday, because they try to hide it throughout the week because they know the weekly candle finally closes on Friday. So they try to play these games. So they done ran out of time, guys. We got to see what's going on. So while you guys are waiting for 11 o'clock, let me go ahead and put this stuff up on the screen and make sure we're good with everything else we need for tonight's show. Because I believe I have everything ready to go. I think it's a few things I need to set up. Oh, the chat. Let's get the social stream ninja. Social stream ninja going. Make sure I can hear this. Yes, sir. Turn that down just a little bit. And thanks again to J-Rock. Shouts out to J-Rock for sponsoring last night's live stream. And like I said, when anybody sends in a Cash App and the PayPal, whoever sends the highest amount, they'll be the sponsor of the next show. So that's what we're going to start doing moving forward, just to give you guys some type of appreciation for supporting the channel, because I'm not monetized yet. So every dollar counts. So I appreciate that. It goes a long way. It makes all of this stuff extra worth it. Extra worth it. And from time to time, you might see a guest star appearance of a fly or some type of insect. I told you guys during the summertime, when you open these doors and we got a dog, so letting her in and out the house, they be like, "Oh, it's cool in there." And then come, oh, and once they ain't here, the best thing we can hope for is for them to die. That's all we can hope for. Because they are tough. They're a tough kill. That's all we can hope for. Just go somewhere and die. So I can stop having flies in the house. All right. You got about 2 minutes. 2 minutes. 2 minutes. Just checking everything. You see, SpaceX is doing what we talked about. You know something else that was weird about? Well, not weird. That was kind of, I guess it was expected. See, when they first, I think options came out on SpaceX like a week after they IPO'd. But right after options came out, where you could actually benefit from the stock declining, it started coming down more. Peaked at it today. I think I seen it hit a low of 125. Like it finally came down to like the 125, $125 SPCX. Let's see. Oh, it's 125 now. I'm sorry. So it closed today at $131.11. But if you look right now, it's trading at $125. I don't know how far it actually fell in extended hours. Let me look. We got like 1 minute. I can go look. Matter of fact, I can pull this up on the screen, let you see it too. I can let you see it too. I can let you see what I'm looking at. So I got SpaceX pulled up on the chart, and I want to see. Look at this. So it went up to like 132 towards the end of the day. We're looking at a minute chart, then it flushed down to 131. And then if we go to extended hours, so put this on equities, show extended hours right here. And we're about to start the show. I just want to peek at this right quick. Because it's like now the news then almost went silent. They don't even talk about it. That's why when they're in the news like this, like crazy, especially when it's positive news, that's why I want to do a whole video focused on that topic of headlines and news. It's like it's advertising. It's just like, buy. It's like they won't stop talking about it and they say it's going to the moon. It's like they're advertising this thing like crazy to the point where it's like running a commercial. And here it is, $124.51 from the high of $229. And some people don't even know that it was even that high, because it reached $229.85 in extended hours. So on a regular chart, on a weekly candle and daily, or on a where the candles or the bars are day candles, you won't see that as a high. You will not see it show up as a high. That was in the extended hours following the June 16th trading session, after hours. But okay, let's go ahead and get ready to start the show. So let's go here. Let's go there. We got light. We got that. All of that. Yep. All right. Okay. Thank you guys for tuning in. Please hit that like button. It helps out tremendously. And if you haven't subscribed to the channel yet, I would appreciate it, or consider subscribing to the channel. It would help out tremendously. Tremendously. All right, let me double check this phone, make sure it ain't gonna go off during the live stream. And then we can get to it. Modes and routines. Live stream. Turn on. There we go. So that way I'll get an immediate alert, because I had to set that up, where if somebody sends a Cash App or PayPal, I'll get the notification immediately. I found out like a week later. I know they was probably like, man, I ain't sending him nothing else. I sent him something. He ain't even say nothing. He didn't say thank you or nothing. I didn't even know I had it. So we about to fix that right now. Moving forward. I don't want that to be a reason you don't want to send it. All right, there we go. So we got that set up, and we can get to it. All right. Welcome to Market Recap Live. I'm your host, Joseph Martin, and thank God it's Thursday, guys. Oh, it's Thursday. And tonight we are taking a look at ticker NFLX. You might know them better as Netflix. Netflix Incorporated was founded in 1997 by Reed Hastings and Mark Randolph, with the first office opening in Scotts Valley, California. Now they're publicly traded on the NASDAQ and have a market value over $300 billion. Yes, that's billion dollars. Netflix is in the entertainment industry and the communication services sector, and they are listed in the S&P 500 index. Some of Netflix competitors are the Walt Disney Company, ticker DIS, Warner Brothers Discovery Incorporated, WBD, and Paramount Skydance Corporation, PSKY. We're going to review Netflix earnings, their website, and pull up the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube, Facebook, and X. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, FB for Facebook, and an X for X. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming live Monday through Friday, following trading sessions at 11 p.m. Eastern Time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern Time, and there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to it. Let's get to these earnings. Take that down. Go here. Bam, bam, bam. Oh, man, that don't look right. We need this. Oh, we got it. We fixed it. Calm down. Hold your horses. We got it. Let's go. All right. Netflix, ticker symbol NFLX, the $313.1 billion company, reported its second quarter earnings on Thursday, July 16th. They have a 52-week high of $127.75, which took place on July 17th last year, and a 52-week low of $70.86 that occurred on June 25th, which is a trading range of $56.89. And they closed today at $74.35. Netflix earnings report missed on the top line, reporting revenue of $12.56 billion, which was lower than the market expectations of $12.58 billion. But they beat on the bottom line as higher subscription pricing and robust advertising tiers expanded profitability. EPS was higher than the analyst and market expectations of 79 cents when they reported an adjusted EPS of 80 cents. Netflix reported a GAAP net income of $3.4 billion, which is higher than the which is higher than the $3.13 billion net income they reported this same quarter last year. This represents an increase of 8.6%. So for the second fiscal quarter of 2025, their net profit was approximately 7.9% lower than it is compared to now a year later. The earnings were released after the market closed, followed by a 4:45 p.m. Eastern Time conference call. As far as guidance, the company narrowed its full year 2026 revenue guidance to a range of $51 billion to $51.4 billion. That 52-week high compared to today's closing of $74.35 represents a decline of 41.8% in just under a year. So if someone invested $1,000 in July of last year at that 52-week high of $127.75, they will be seeing a loss of $418. Woo! We did that. All right, now let's move on. Here we go. Bam. Wait a minute. There's a lot of stuff missing. That's the wrong button. There we go. All right. Researching a company. Let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customer? What makes this company stand out from the competition? And how well do they take care of their employees? Where we look, we search for those answers in four main areas: the homepage for goods and or services, about us for purpose, vision, values, and mission statements, careers for employee benefits and opportunities, and investor relations for stock quotes, charts, and financial reports. And for your convenience, all companies featured in tonight's live stream are down in the description. All right, let's go visit Netflix on the website. I was about to say charts, on their website. Let's go over to their website. Here we go. Blow that up. Bam. Got it. There we go. A little better. All right, guys, it's going to be everything in the world on this thing about streaming. So we're going to go down to the bottom and we're going to see some things. Tonight, Bella, thank you for tuning in. Good evening to you. Let me pull your chat up on the screen. Let everybody see that you're saying hello. I appreciate you. Here we go. There we go. Good evening. Appreciate you. Good to see you. Hope you made some money in the market. We'll be chatting. Let's get through this website. Let's get through it. Glad you're tuning in. All right. So we got it. Netflix. They got some good shows or something coming out, don't we see? Reasons to join. Yeah, a lot of these streaming services, we at the bottom. It wasn't much of a scroll, was it? So let me go ahead, take me off the screen, and let's see what we gonna click. Where is the cursor? There we go. There's the cursor. So we got investor relations right here. So we got jobs. We have jobs. So instead of it being careers, we got that Netflix house terms of use. Only on Netflix. Ooh, guys, I don't see anything like about us. Maybe corporate information. Hey, maybe we'll stumble across it. Let's just go ahead and go to jobs and see if we can find the careers information. There it is. So we see careers right here at the top. So you go in jobs, then they mention careers like it's something different. Join a star-studded ensemble. And I'm scrolling and it looked like ain't nothing moving. There it is. It's one of those funny animated scrolls. We call it the Dream Team, a group of people who love what they do and strive to do it better every single day. Come and be a part of it. Got it. Learn more about our culture. Step into a leading role. Some follow. We look for the leaders who perform the best in our wide open, almost no rules culture. Is that you? Learn more about inclusion. Learn more about our work-life philosophy. Can't see it because I'm there. There we go. Keep going. Learn more about our office locations. We are making steady progress on our mission to entertain the world. Join our dream team. Guys, that was terrible on me. Like trying to scroll back for something that we went through is going to be HE double hockey sticks. So we going to move on. Look where About Us is buried. You see that all the way down there at the bottom? Now that wasn't even on the main page. It's under what? Jobs, down at the bottom of the page. Here's where it says About Us. So I'm clicking on it. What's happening? Is it gonna load? It's not even doing anything. This is terrible. This is terrible. Oh gosh, just take me back. Let's click the careers. Okay, so we go to careers. These are different roles and departments that they have. So I don't see anything about benefits, and they have the doggone website set up like it's a movie. I'm not trying to watch a movie, just scrolling through the website trying to learn about the company. I want to read. I want to learn about the company. If I wanted to watch a video, I watch a video. Oh man, how we go back? How we go back to the very beginning? All right, here we go. So that was jobs. I'm ready to go to investor relations and give up. To be honest with you. All right, here's investor relations. There's the stock information. Let's look up here. Stock info. All right, so let's scroll over this page. Look how this is not a movie. You see how this isn't as animated? Like this is what we want to see. We're just trying to read about the company. We want to watch a video. We sign up and watch a stream. All right, so go up here to stock info. Here's the stock quote, stock chart, and other information. So let's go here. All right, here's the stock quote. They literally have it separate. So you have to click on chart. So there's the chart. I'm not going to click on that. You see where it is. Those are other tools. If you can find that other stuff, tell me about it. Share that with me down in the comments or the chat if you can find that other stuff, because I couldn't find it. And I'm not about to spend all our time on that. So let's go here and talk about, well, this is normally what I tell you. So let's go here. I usually tell you about their clients and partners. But Netflix does not have any clients and partners that are listed in the S&P 500 index specifically. That's usually what we talk about here, and they don't have any. So let's talk about the mobile limitations. Let's talk about that. Before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited and don't have all the features that are available on full trading platforms. Now, let's look at Netflix on the charts. Let's go over there. All right, here we go. Bam. Put Netflix back up here. All right, guys, we're good. And I know this is SpaceX, so give me a minute. Let's change this. Let's go up here to the symbol box. Netflix, NFLX. Here we go. So Netflix has a 52-week high. We starting off at the wrong thing. Want to break this down. So we're looking at Netflix on the 1-year daily chart. We got that down first. Now, here's their 52-week high of $127.75. Here's their 52-week low of $70.86. And last night, we briefly talked about I don't think it was last night. I think it was 2 nights ago. We briefly talked about stock splits and how following stock splits, stocks tend to take a dive. So we'll come back to that. We'll come back to that because we'll start getting into technical analysis on the 1-year chart before we look at the higher time frame. So let's go over here and look at the 10-year weekly chart, and then we'll come back to that. All right, take me off the screen. Here we go. So Netflix has a 10-year low of $8.45. Ooh, what about it? What about it? Now, they have a 10-year high of $134.12, which is also nope, it's not inside of that. So it's not also the 52-week high. So some of the companies we've been looking at, the 10-year high has also been the 52-week high, but this is actually outside of that time frame. Okay. So I can put me back on the screen. When we look at this, it looks like Netflix was finding some support on the higher time frame on the 200-week simple moving average. And then we can also look back here. If we look at the high of this candle, so I'm looking at the crosshairs. So if I put a price level right there on the top of, what week is that? It looks like that's November 5th, the week of November 15th. That is a $70.10 price level. And it looks like a few of those candles, I know it's small, guys. Let me spread that out just a little bit, and I'll take me off the screen. It looks like those prices came near it. So you have the 200-week simple moving average approaching that $70.10 price level. And we can also see that these weeks responded to that price level as well for a few weeks inside of the 2024 year. Okay. And then they did the stock split at the end of 2025, which we're going to talk about again later when we go over to the lower time frame. And I want to point something out to you once we go over there. We got a lot to talk about when we get over to the other time frame. So let me put this here while I see it. So we're going to put another price level right about here. Okay. Yep, I'm seeing it respond to it over here. Let me move this so you can see this area was responding to that price level of $63.44 over here for a few weeks and throughout this area right here. Okay, so let's remove all of this. We're good. Looking at the higher time frame. Also, right here, the 9-week simple moving average is the $79.30. So it's trading below the 9-week simple moving average, and it was trading above. Oh, we're going to get to that. It was trading above the 200-week simple moving average, and that is at $70.77. The bubbles are close to one another, so you can't see it. I think if I spread it out, there you go. You can see it. All right, so let's go back to the lower time frame. Let's go ahead and go to the 1-year daily chart. And guys, let me point this out to you right now. Remember, we're covering the company that had earnings today. And since they announced earnings after the market closed, it responded to that and extended hours. So the stock actually closed at $74.35 at the end of the normal trading hours, but it took a nice little dip, nice little dive, and extended hours. So let me show you what that looks like. So we're going to go over to the minute chart. And I wanted to show you how to switch over to it, but I already had it set because I was okay. So anyway, if this isn't on your chart, let me show you how to do this right quick. We go to the settings, we go to equities, and you want to make sure this box right here where it says show extended hours trading session is clicked. If that's not selected, it won't be there. You saw how that gray shaded area went away. So you would just see the normal trading hours. And that's where let me close this out. This is where it stopped at 4 o'clock. You see, like right towards the end of the trading session, it came down here to around $73.50. I'm just rounding it off. And then it spiked up, came up here and closed at $74, around $74.50. The ultimate close was up here. But then we go to extended hours, and it seems like the market didn't like what they said. And it died. It took a little dip, took a little dive. It came down to as low as $67.34. So it's still trading in that $67 range right there. Okay. So we got that. Let's go back to our 1-year daily chart and let's look at some technicals. Now, here's the thing. Now that I done pointed this out, we would be doing the technicals based on what we saw on the chart. But remember, the price is actually down to $67. So it's already below this price level right here. So if it stays below that, we're going to actually see a gap open tomorrow to the downside. Okay, so I'm not going to put a line there, and it's trading below the 200-day simple moving average and the 9-day simple moving average. These dashed lines, the white line is the 200, the 9 is the green line. I'm thinking, guys, that's why I'm kind of like pausing and talking funny. I'm thinking because I like to show you guys at least 2 levels of support, and being as so that it's already down here, I only have 1 level of support showing for you. So I'm gonna go back to the higher time frame and see what I can find. I like that one. I like that right there, right up in here. So I'll show you what I'm looking at, and I'm gonna do it as a zone. So I'm connecting it to the low of that week, and I'm coming back here and connecting it to the high of one of the weeks back here, and I'm looking at how I like this high on that week right there, and you couldn't see it because I was in the way. So what I did, I took us to a higher time frame. I'm going to extend this over to December 1st, and now we're going to have a zone December 1st, 2026. Come on. There we go. And I'm gonna extend this over to the left so you can see, I think that's good enough, how the other candles are responding to it. So you have some highs, some open and some closes touching the bottom of this zone that I put here on the weekly chart. Okay. And now when we come back down to the lower time frame, now we have another area we can look at for potential support. So when I open up edit properties, we're going to put the price levels there. Put me back on the screen. All right. So we need a price level at 55.75. So let's do that. 55.75. Just go ahead and put it there and then go to edit properties. 55.75. Bam. That's going to be the lower part of that support zone. And then the top would be 58.70. 58.70. Edit properties, 58.70. Bam, 58.70. So that's the top. That's the top of that support zone. So now that's what I'm seeing as far as a few levels of support. And since it's trading around the $67 price point, that's what I would look at for it to find support, somewhere in that zone. The top of the zone is 58.70. The bottom of the zone is 55.75. Let's spread this chart out a little bit. Now, over here, so you'd be like, what is that? Why did he put that there? I was looking at Netflix for a minute. I actually had my eyes on it. And I looked at this as consolidation. It looked like it was just trending sideways. Then once it got this close, can you see that? It got this close here between these 2 days. It gapped up. But what I mean by got that close, it closed over the 9-day simple moving average this second time right here. And then this pattern, well, since it's trending sideways, this wouldn't technically be a bullish pattern from what I read from my experience. It has to appear at the bottom of a downtrend. Once it got here, to me, it was trending sideways. But just keeping an eye on it at that point, I want to see it come out of that zone, the top of that range. And when it did, it gapped up. It gapped up, never filled it, kept going, closed above the next level of resistance. So that became support, and it gapped up again. It just went crazy after that. All right. So that's why that's there. I identified that as consolidation. I don't remember why I have this on the chart. So since I don't, I'll go ahead and remove it. Okay. So that's what I have. And you can see the other levels as far as resistance. All right. Let's blow this up a little bit and let's get the stock quote for Netflix so we can move on, because we need to talk about the volume. What was the volume like today? All right, so let's go up here to settings, cut on my floating data box. Here we go. So Netflix opened today at $73.95. They had a high of $74.68. They had a low of $72.94. And they closed today at $74.35, which is the trading range of $1.74. Now, when we look at the volume, they traded 77.5 million shares of this stock today. So is that a big deal? Is that a little deal? We don't know. We're going to look it up. So take this floating data box off, take me off the screen, and let's go over here. The average trading volume for Netflix in a daily trading session, guys, is 41.9 million shares. So today definitely came in above average with the 77.5. And we can see that this daily candle right here was below average with 32.8 million shares traded the day before the earnings announcement was released after hours, this candle right here. And this is just a trend line that I had used earlier to get the decline from the 52-week high to today's close. So we can remove that drawing as well. remove drawing. And then we get finished discussing the volume and we can move on. So the volume percentile, guys, out of the most recent 252 trading days volume, today's volume was higher than 94.8% of those candles. To be exact, only 13 of those 252 trading days had higher volume than today. Bam, we got it. So we can go ahead and move on because we're about to talk about the community support. Let's talk about that. All right, so let's go here. Bam, 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 bam. Got it. All right, community support. Back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe, and if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description as well as on the ticker on the screen. All right, S&P 500 index. Okay, let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company inside the S&P 500 index. Let's go to the charts. Bam, 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 dun, and SPY. Got it. All right, let's zoom out here. We go up to the symbol box, SPY. Here we go. Yeah. Take me off the screen. All right, so the SPY has a 52-week low of $618.05 and a 52-week high of $760.40. And the SPY seems to be trading within this range we've had on the charts for a while now. So let's go ahead and zoom in and focus on the current price action. Yeah, guys. Ooh, did it actually close under that 9-day simple moving average? We about to find out. About to find out. That's what we about to do. So what I'm seeing right here, That looks a little tough, guys. It looks a little tough. It failed to make a higher high. It failed to have any of today's body close within the body of the previous day. It looks like an indecision candle, like it's kind of balanced, but it has a longer lower wick than the upper wick. But it's closer to the support and that psychological level of $750. So let me put that on there real quick. I like putting that on the chart, those psychological price levels. So it's close to that 750. It closed today at 750.72. So it's a few cents above that actual price level. And I want to see if it actually closed below the 9-day simple moving average, which is that dashed green line. So if I open up, let's just use that. Let's do that. Undo and undo. There we go. All right, let's cut on the floating data box. Now, I know we use this when we're looking at the ETF quote, but right now I want to focus on the simple moving average. So the simple moving average is at the 9-day simple moving average is at $750.84. And they closed today at $750.72. So that may not seem like a big deal to you, but technically that means that it closed below that simple moving average. And sometimes it's just that little bit of falling below average that caused people to get afraid and some selling picks up and it ends up going further to the downside. That could be an early signal of that, but it's still within that range, slightly above support at that $749.88 and that psychological level of $700.50. Okay. So since we already got the floating data box open, let's go ahead and get this ETF quote. So the SPY opened today at $752.76. Let me say that again. The SPY opened today at $752.76. They had a high of $754.57. They had a low of $747.88, and they closed today at $750.72, which was a trading range of $6.69. Now, I didn't talk about the simple moving average of the 200. So we got a 200-day simple moving average, and we can see that in the box as well. That's all the way down there at $696.29. So it's still trading above that as well. Today's volume came in at 46.4 million shares of this ETF was traded today. So what we're going to do, let's see what this is compared to the average volume that the SPY gets on a daily trading session. So let's take me off the screen. We already took off the floating data box. So we can see right here that the average trading volume for the SPY is 72.6 million shares in a daily trading session. And today we came in below average, guys, coming in at 46.4 million. Now, this candle yesterday, Wednesday's candle, that was actually closer to this area of resistance of $755.44, had lower volume. That day came in at 43.8 million. So we see an increase in volume to the downside, okay? So we see the volume slightly increasing by 3 million shares as it's coming down to the downside to test this area of support. And something else that I'm noticing, guys, that I didn't mention before, we talked about it, but I didn't actually say it specifically, was that yesterday, that wick came down and bounced off the 9-day simple moving average, and it did not actually touch that level of support at $749.88. If we mouse over that candle, the low of that day was $750.20. So it didn't touch the $750 yesterday either. So the wick, the price action today was actually able to break both of those and close below the 9-day simple moving average. Okay. Now let's take some of this stuff off. Let's do this a different way. I just want to remove these arrows. You can't even see them. So over here, let's talk about the volume rank the volume percentile to see how low this volume actually is. So out of the most recent 252 trading days, guys, today's volume is only higher than 12.7% of those candles. To be exact, only 32 of those days had lower volume than today. Bam. Bada boom, bada bing. I usually say that later in the show, but I'll say it now. So let's go ahead and go back here. Bam, 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 bam. All right, now sector performance tracker. Time to follow the money. Let's look at each sector inside the S&P 500 index to see how they performed today. Okay. So let me pull up our notes, and I made a few changes, guys. I made a few changes. So I'm going to explain to you what those changes were, but I think they're going to be helpful and important to discuss and go over. Hope you didn't have to look up my nose because I was looking real tough up here at this screen as I was moving my notes over. But anyway, here we go. Those are my notes. Let's clear this off. Let me bring you over so you can see what's going on. So you don't get too bored. Let's get you some visuals. Let you see what's going on over here. There we go. Bam, 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 and sector performance. Gotcha. Gotcha. So here are my notes, or our notes, but we need to pull up the sector performance tracker. Here we go. Now, let me tell you about some of the changes I made just in case you haven't seen this before. So if you have been following, most of these were saying 6 months, and I'll explain what's going on. So up here in the upper right-hand corner, this is going to upper left-hand corner. This is telling us the time frame we're looking at. So this is 6 months, but it's the most recent 6 months. So starting with today, looking back 126 trading days. That's what's going to be in the parentheses. I think that's what those are. Don't look it up. Those is inside of the brackets. That's the amount of days we're looking back, starting with today, to look at the 6 month time frame. Okay, but we're just looking at today. I just want to let you know how to read it. So 1 day, 1D is 1 day. So that's what we're looking at as far as today. And I changed it. We were looking at the SPX. Now we're going to start looking at the SPY. One of the reasons I wanted to change this is because I want us to look at financial instruments that are actually tradable. So we can't trade the S&P 500 index, but you can trade the SPY. You can trade, it's tradable. That's what I'm trying to say. The SPY is tradable. The RSP is tradable. And we'll talk about that in a minute as well. So let's start getting our notes together. That's enough to explain that. If you got any questions, just go ahead and put them in the chat and I'll address it. If you got any questions about what we're looking at or why we're doing what we're doing or anything like that, let's go ahead and move on and get this going. So put that on top. All right, so the SPY is down 0.5%. Energy is up 0.9%. Today's performance. Let's start this over again. As far as today's performance, we're using the SPY to track the S&P 500 index. So the SPY is down 0.5%. Energy is up 0.9%. Materials is up 0.8%. Industrials is up 0.1%. Consumer discretionary is up 0.3%. Consumer staples is up 2.8%. Healthcare is up 2.2%. Financials is up 0.3%. Information technology is down 2.2%. Communication services is down 0.6%. Utilities is up 0.6%. And real estate is up 2%. Now, really quick, RSP is an ETF. It's right up here. The information for it is right here. Investco. Oh gosh, read it for yourself. I'm trying. I thought it was a T in it. It looked like Investco. S&P 500 equal weight ETF. So what this does, that ETF gives every company inside the S&P 500 index a equal weighting. So that's going to help filter out some of the, I want to say some of the noise, because with the SPY, you have companies that are heavily weighted and they tend to have a stronger effect because they're heavily weighted on the price action of the index and the SPYs that's associated and the ETFs that's associated with it in a weighted factor. Okay. So it helps balance things out. So because of that, we can see now when we look at the RSP at the end that the market actually went up. But if we look at the SPY, it's down 0.5%. But when we balance all the companies out, it's up 1%. So that's a 1.5% swing. So I'm going to add that. I'm going to break it down, do some more research to help do a better job of explaining why that's important. But that's what that is. Now, let's put in the notes for today. And I remember that we do this over here. So we have it all laid out right here. So here is descending order, the descending order for the performance. So we got SPX, but we're going to put the SPY, which is slightly different. Yep. So since we've been doing the SPX, I have that over here. I'm just going to put that in. So negative, they went down, negative 0.51. We got that. The biggest gainer is XLP. So XLP, consumer staples, they were up 2.34%. The next one is XLV, healthcare, and they were up 2.22%. Real estate, XLRE, they are up 2.02%. And now we're going to do the biggest losers as far as the sectors inside the S&P 500 index. And we're going to put this in ascending order. There we go. So the biggest losers, information technology. So that's XLK. And they were down 2.24%. Then we got XLC, communications, services, and they were down 0.6. I need to put 0.64%. Yes. And actually, guys, the last loser is actually positive. So that's going to be XLI, industrials. So they were actually up 0.05%. Okay. So now let's blow this up or expand it at least. And then we're going to go over our notes to see how things are moving. So let's go ahead and put this to both, put a Y in both, And now we're going to go through each index, each sector one at a time to see how they showed up this week, if any. So communication services, they showed up twice. So they showed up as the biggest gainer on Wednesday. They showed up as the second loser today. They showed up as the second loser for today. Okay, so they showed up twice this week. Consumer discretionary showed up twice this week. On Monday, it was the second biggest loser, down 1%. And on Wednesday, it was the second gainer. That balanced itself out, up 1%. So now consumer staples, they showed up twice this week. They was down on Tuesday, coming in as the second loser, second biggest loser. And then on Thursday, they were the number one gainer today, coming in at 2.3%. Okay, now energy showed up 3 times this week, Monday, Tuesday, and Wednesday. Monday and Tuesday, they were a gainer. Wednesday, they were a loser. Okay, let's go to financials. Financials was quiet today. Let's peek over there, though. Even though they weren't a top gainer, we can see over here that they weren't a top gainer and they weren't the biggest loser, but they were positive on the day. We can see that right over here. So financials been green all week. All right, now let's go to healthcare. Healthcare showed up twice. On Tuesday, they were a loser, and today they are a gainer. Industrials, they showed up twice. That's not really moving much. Information technology, guys, they showing up on every day this week. So information technology showed up every day this week, and they showing up as the number one loser or the number one gainer every time. So it's losing way more than it's gaining when we look over it like that. So this is an easy way to find out in 1 week when we break this down, like a quicker way to get an indication of something happening before other investors or traders use a lagging indicator like a simple moving average. We can see it quicker because we're watching it daily. Okay. Materials are quiet. They're not the biggest gainers. They're not the biggest losers. Real estate. Okay. They went up 2% today. They're the third largest gainer or biggest gainer. And then on Tuesday, they were the third biggest loser, losing 0.5%. All right. So what I'm seeing right now, we still looking at financials is standing out. And we looked and seen they were still green today. They just weren't the biggest gainers today. They weren't one of the top 3, but they showed up as one of the top 3. Well, it was the third one every day this week, except today. So financials and information technology. And healthcare kind of balanced itself out. What was the other one? Information technology, financial and information technology. Okay. All right. Got it. Let's move on. Let's talk about the biggest gainers and the losers. Go back here. Take that off. Go here. Go there. Got it. All right. Biggest gainers and losers. Now let's look at the S&P 500 index, biggest gainer and loser of the day. And first, we're going to look at the loser so we can end the night on a high note. But I got a message. Let's see what we got going on. Hey, NLMJ, let me pull your chat up. Let me pull it up. Let me see what you got going on. Take that off. Take this down. Put that there. Okay, here we go. With a top-down analysis, how would someone find an opportunity in a ascending or descending sector? So in a top-down analysis, aren't you starting from like a macro approach? That's going from like a macro down to like the company, right? I'll give you time to respond to that. Because what I'm doing with that tool, or why I like that tool, is a faster indication to me. In my perspective, it's a faster way of seeing how money is coming out of a specific sector and going into a specific sector, even though it's weighted with the largest market caps first. So then I would use that to see what type of opportunities were in that particular sector in the S&P 500. Like, For example, let's go over here to the chart. Using your sectors, how would someone find an opportunity? Right. Okay, that's what you're asking. So let's go. Let me show you what I'm talking about. So how I would use this, go back to the charts. I would go up here to Market Watch, and I would look at the individual sector. So if the sectors I was looking at was like we looked at, it's moving the most or moving in certain directions with activity in financials and information technology. So I would go up here and I created my own watch list that just focuses on a particular sector. So I have them all right here. Let me take me off the screen so you can see it. So right here, communication services, energy, whichever one I want. But these are going to be the dynamic watch list. So it's going to constantly update depending on what's going on. So then I would look at information technology. So let's say based off what I was seeing, that we're seeing more red show up in information technology than anything. You notice how now when we go over here, we see all these individual companies that's red, but we have it in this order. Let's change the order. So now when we change the order, we got the green at the top. But then if we wanted to break this down and see what industries are these in, we know that they in the information technology sector. Let's see what you said now. Not for me, but I'm sure people are thinking, how do I find a play in a particular sector? Okay, so it's just not the strategy you use. Okay, got you. Yeah, I know just everybody, it just depends on the strategy. It just depends on the strategy. So for me, I want to get people familiar with like how to use the different platform, how to use the platform, how to look at different things as far as like sectors, what's the difference with industries, sub industries, how some things move together, how some things move differently and things like that, and where to navigate and find different opportunities. But depending on the actual strategy that the person is looking for, whether they're long-term, short-term, swing trader, day trader, some of this stuff might not even matter to them because the amount of time they plan on spending in the market. So for me, then it depends on the overall market. Look, it might be bullish, but this in particular sector right now, the heavily weighted companies, they taking a hit right now. Like if we look at Sandisk for instance, for educational purposes only, by the way. So we go to closed and we pull up Sandisk, SNDK. A trader could have possibly looked at the fact that once Sandisk had closed below this 9-day simple moving average, to start keeping an eye on it. Not to do anything, because some people wait for a confirmation or something like that, but like keep an eye on it. Like, okay, it's failing to reach another 52-week high, it's closed below it, came back up, and it wasn't able to make a new high. Let me see how many times it's going to dip back below this 9 and kind of trend sideways. Once this big red candle came in right here, it could have been an opportunity to wait for it to come back and test that 9 again, and then try to take a bearish position. Because at that point, it wasn't just Sandisk that was showing weakness. It was the whole industry that Sandisk that was in that was showing weakness. So this would tell me that it's something going on with that industry. So all of those companies are saying, hey, it's a problem over here. And then that would make me think bearish if I was thinking about an opportunity over there. That's how I would see it. All right, I hope that answers your question. So let's go ahead and go to the biggest winner, the biggest gainer. I mean, biggest loser for today. Got distracted. Here we go. Take the chat down, go here. Pulled it up too fast. Oh gosh, let's go over here to Market Watch. So here we go. Market Watch, go to the top. Change the order, change the watch list because we changed that. Let's go over here, S&P 500. Here we go. The biggest loser for today, just spoke it up. The biggest loser for today is, guys, Sandisk. Ticker SNDK, Sandisk Corporation. I got the chat. Cool, thanks. Got you. I'm about to pull your chat up right now so we can get it. I hope that was helpful. I don't want to never be like I'm rambling or I'm avoiding a question, because you guys make me better when you guys tune in and ask questions. And I will humbly and honestly admit, hey, I don't know, or I need to do some research on that or look it up. But I want to make sure that whatever I'm sharing on this channel provides value. Like, is it something that somebody can actually use as far as like learning, not advice, but something you can use in your own approach to the market? Like, how do you use that? How would somebody use that to do something with? So I want to do my best to make sure that I'm showing things that are actionable, that you can make your own decisions with, versus somebody just saying all these cool stuff or showing all these lines. And I'm like, so how do you use it? And they be like, I don't know. Nah, you need to know why you're using it. That's just, you don't just put indicators on there or do stuff like that and somebody don't even know what it means. That means you're just being fancy or trying to talk over somebody's head. That's what I think. If somebody does, like, you need to be able to explain this stuff in plain English, in my opinion. So Sandisk lost 12.63% today. Their previous close was $1,615. And they closed today at $1,411.08. So let's do our hypothetical. Here we go. So let's say $6,400. So today, somebody invested $6,400. They lost at 12.63%. 12.63. We negate it. Turn it to a percentage. So they would have lost $808.32 of their $6,400 investment. We add the $6,400 back to it. And there we go. They would be left with $5,591.68. Got it. Now let's go ahead and move on to the Analyze tab. And we can see that Sandisk is inside of the information technology sector. So we're going to look and see how that sector performed, how the industry performed, and how that sub-industry performed. So let's go ahead and go up here to Market Watch, Visualize. Bam. Let's back out of this. So here is the heat map for, oh, excuse me, my mouth is so dry, excuse me. Here's the heat map for the S&P 500 index. Hold on, guys. Let me ask my wife for some water. Hold on. All right. So here we go. Here is the information technology sector. Now, here's what I was talking about earlier as far as like industries. Here is the semiconductors and semiconductor equipment industry. This whole industry is green except for this one down here, this tiny market cap compared to everything else down here. But because of this industry situation, all of these companies are taking a hit. Now, it doesn't show like this every day, but if you're looking at it every day, you're going to see the pattern sooner than somebody relying on a simple moving average, because those are lagging indicators. So now we're looking at Sandisk. So when we go here, it's going to be in the technology, hardware, storage, and peripherals industry. So now when we go in there, we can see that the reason why this looks so green, this is only one company. This is Apple. But the majority of the companies in this industry is red. You got HPQ showing up green, but SMCI is red, Western Digital, NetApp, Hewlett Packard, Seagate, Sandisk, and Dell. So now, yeah, and the sub industry is also technology, hardware, storage, and peripherals. So that's that. Now let's go back to the Analyze tab. And before we go to their website, here's the company name, Sandisk Corporation. Here's the link to their website. It's also down in the description for your convenience. Now, let's read a little bit about the company and we can visit their website. Sandisk Corporation develops, manufactures, and sells data storage devices and solutions using NAND flash technology in the United States, Europe, the Middle East, Africa, Asia, and internationally. Got it. Now, let's go to the website. Bam. Put me back on the screen. Take that down. We already had it up. Okay. We've looked at them so much. They've been the biggest gainer or the biggest loser. We almost looking at them 2 or 3 times a week, or have been. So most of our technicals, well, they've fallen so much. We probably need to put some more supports on there, but let's get through this. So let's scroll over this home page. They still talking about They had a lot of soccer stuff up here before. It looks like they updated the page and changed a little bit of the stuff. All right, we're down at the bottom. So here we go. We're going to go to About Us. We're going to go to Careers, and we're going to go to Investors. Let's go to About Us so we can get this knocked out and go over to the charts. Scroll. About Us. At Sandisk, we keep people and businesses moving forward with inspired innovations to actualize their potential. Who we are. Our vast portfolio of Flash products enables a seamless and simplified world of resilient data expression and storage. Look at these flies. Okay, our principles: innovation, sustainability, collaboration and community, responsible leadership. Innovation, propel progress. Okay, invest in tomorrow. This is sustainability. Powering people starts with protecting the planet. We are dedicated to responsible practices across the full scope of our supply chain, continually striving to go above and beyond to preserve and care for the world we all share through ambitious sustainability goals, shaping our business in service of tomorrow. Building better together, collaboration and community, leadership that guide the way. So here are the directors and things like that. Board of directors down here. What's up here? Executive leaders. So those are the executive leaders. Here are the board of directors. Okay, so we're down at the bottom. So let's go ahead and go to careers. Take me off the screen so you can see it right here. Bam. Put me back. Okay, and here go benefits right here. They're right at the top. So let's scroll over and we'll click on it in a second. Join the team. Join Team Sandisk. Inspire and innovate one pixel at a time. Meet Sandisk, students and grads, and benefits. 2 places to find it. Our teams: finance, strategy, technology, engineering, global operations, people experience, legal and compliance, sales, and marketing. And remember, links to the website are down in the description for your convenience. They talk about the hiring process. And I like that about companies, to prepare the candidate before they go through the process. That's very good. Find the perfect role. Got it. Now let's go up to benefits. Bam. Helping you thrive. So here are the different benefits that they offer. Healthcare, I'm not going to read all of those. Lifestyle and well-being, and financial benefits. Okay, all right, good. Now let's go to investor relations. Put me back on the screen. Guys, they popped this up all the way over here behind me. Let me bring this over so you can see it. Blow this up, zoom in. And thank you guys so much for tuning in. Please hit that like button. It helps out tremendously. And if you haven't done so already, consider subscribing to the channel. And thank you guys for commenting and chatting and asking questions tonight. It's very good for the channel to help people engage. Thank you so much. So our mission: inspiration and innovation in motion. Here are some stats about the company: news releases, events, quick links, and we're at the bottom. So right here at the top, let's go to stock quote and chart. And they have other tools there as well. Let's go to stock quote and chart. Oh, here's that delay thing, guys. Here's the stock quote. And we've talked about this numerous times. When it's a delay like this is where the chart's going to be. Whatever outsourcing they do, for some reason, is delayed. Sometimes it takes like 10 or 15 seconds before this pops up. They have an investment calculator for investors that visit the website, or people interested in using that on the website. Historic price lookup and analyst coverage, and there's the chart. All right, cool. Now let's move on. Let's talk about what I found out about the company in my research. So here we go. Bam. We can leave that there about Sandisk and go here. All right. So Sandisk Corporation, ticker SNDK. When it comes to their goods and services, they manage memory infrastructure across the enterprise, cloud data center, and consumer electronics markets, offering solutions such as, number 1, complete flash storage options, including micro SD cards and USB drives for mass retail consumers. Number 2, scalable enterprise drive products, including high-performance SSDs, solid-state arrays, and data center modules for cloud service providers. And number 3, optimized NAND memory systems tailored for artificial intelligence servers, mobile devices, and automated industrial computing architectures. Looking at their S&P 500 clients and partners, notable names include Microsoft Corporation, ticker MSFT, Amazon.com Incorporated, ticker AMZN, and Meta Platforms Incorporated, ticker META. Now let's go to the charts. Yeah. All right, charts. Zoom out. Okay, take me off the screen. Here is here is Sandisk on a 1-year daily chart. We're going to peek over at the 10-year weekly. They only go back to 2025. If I'm not mistaken, they branched off from Western Digital. And when they branched off from Western Digital, that's why they only go back to 2025. We can see that right here, even though we have a 10-year weekly chart pulled up. So this is like a 2-year low of $27.89 and a high of $2,354.39, which is crazy. All right. And we can see here on the weekly chart, what we talked about on the daily chart, it looks even more bearish if we look at the weeks. As far as how when it came to the 9-week simple moving average, let's check this week. So it popped up above it. You have this bearish engulfing pattern here with long wicks to the downside. But this candle embodied the whole body of the previous candle. So that's the first bearish red flag on a weekly chart. Then the very next week, we have a week that could not make a new high. You have a higher wick at the top, came all the way down and pierced the 9-week simple moving average and closed. It's so close to it, I'm gonna have to look over here to the side. So on that day, the 200 simple moving average was at, they don't even have a price up there. So let me see if this does it. If we open up the floating data box. So if we mouse over that candle, guys, it don't even tell us what the simple moving. Oh, I know why. We looking at the green one. My apologies. So $1,744.83 was the close on that week below that price. It closed right above it, guys. It closed at $1,745. It closed right above, like, what was that? 17 cents? 17 cents above that 9-week simple moving average. And then the very following week, it did close above it. Let me take this floating data box off. It looked crazy. It did close above it, but look how deep the wick penetrated it. So that looks like a bullish indication because of how much it was able to recover. But the weakness showed the following week by that week opening below the body of that candle. And then it flushed down and was able to get below the previous low in the previous week. Okay. So that's what we're seeing on the higher time frame. Let's go ahead and go over here to the daily chart. Whew, nasty. All right. Now, 52-week low, $40.10. 52-week high, $2,354.39. Now let's zoom in. We got a lot of stuff over here because I told you we've been marking this chart up because of how often Sandisk shows up as a biggest gainer or a biggest loser. They always showing up. Okay, so they broke all our little supports we had. And this pattern right here, we had a gap down. I want to call this a hammer. I want to call this a hammer, but let's just keep it simple. If that's a hammer, it's at the bottom of a downtrend because it was trending down at that point. Then you have a very strong green body candle that absorbed that body on the hammer. And then it was able to gap up, test the 9-day simple moving average, wasn't able to close above it. Then we have a pattern here, a candle here that was able to close above support. It was able to close above resistance, becoming support on that day. But then the next day, it opened down here. That was the red flag. Like, where is it going to pick up the next day? Even when it picked up here, it picked up lower, but then it was able to push up. So it's like, it's so many different things that whip back and forth. You got to really be confident in whatever you think is going to happen because it's not as clear cut as it may seem. It's just a way of trying to get it where the odds are in your favor based off of what you're seeing. Like, is this more likely to go up or down? How many different things can I look at? I look at the higher time frame, then you look at a lower time frame, then you look at where it opened or where it was compared to what was before, then you're looking at the historical data, you're looking at the volume. It's a lot of different things that you could take into consideration with this. And then looking at, okay, well, if it reaches this point, then I might be wrong. Like, for instance, if it was able to pierce the high of this candle. So if you made the decision here, if I made the decision here and said it was bearish, I wouldn't worry until the following candle made a higher high than this candle. And you see it wasn't able to do that. It came really close, but it wasn't able to do that. And then it faded down all the way down here. So having some type of guideline or rule of what you're looking for to be wrong and what you're looking for to be right. Because those are the only two things you're going to be. So it has a nice little space here between this price level we have down here at $1,286.13 because this is the top of the support zone. That's the top price. That's the bottom price of that support zone that we have. And part of the reason it was spaced out like this is because it's in the thousands. It's in the thousands and it's moving hundreds at a time on the way down. 50, 100, 150, $200 at a time on the way down. So if I was to put a line here, I'm going to show you why I'm putting it there and where I'm putting it at. So I'm putting it at the open of this red candle. So you got this wick that wasn't able to close below it that you can't see. So I'll bring it over. This wick right here on this candle wasn't able to close below that price level. It opened on this candle, which is the candle that I'm using. This wick wasn't able to, it bounced off of it real strong. You have a close real close to it on this red candle here. You have a close real close to it on this green candle here. You have an open on this green candle, and you have a low that wasn't able to close below it. That's why I picked that price level. Also, that price level is near this level, this low on this candle. So looking back historically, I was trying to see what area over here did it possibly catch about why it stopped in that range. So that's where I got that from. Okay. So let me go ahead and put the top and bottom range on this gap down here, because it's actually possible. It's possible that it could reach this gap down here that it hasn't filled yet. Okay. And I know it's small, so let me spread this out so you can see what those price levels are. That's $1,205 and $1,189.24. That's that gap that hasn't been filled. Okay, let me zoom out, put me back on the screen. We can zoom in. And then we're going to mouse over today's candle and get this stock quote so we can move on. So go up here to the settings, floating data box. Here we go. Apply. Okay. So Sandisk opened today at 1,500. Let me just say 1,000 at $1,527.49. They had a high of $1,551.63. They had a low of $1,390.04. They closed today at $1,411.08, which was a range of $161.59. Now, when we look at the volume, guys, they traded 17.4 million shares of this stock today. Is that a big deal? We about to find out. Cut off the floating data box, take me off the screen, and here we go. The average trading volume for Sandisk in a daily trading session is 12.3 million shares, and today they traded 17.4 million. So it's definitely above average coming in on today's candle. Now, yesterday's candle had higher volume, surprisingly, coming in at 19 million shares traded yesterday. So we see that the volume is decreasing, but it's still above average, guys. Both of those days are still above average volume, coming down to the downside. Okay. So now let's put me back on the screen and let's talk about this. So the volume percentile out of the most recent 252 trading days, Today's volume was higher than 78.2% of those days. To be exact, only 55 of those days had higher volume than today. Got it. All right, now we can go ahead and move back to the charts. Go back, the watch list. Let's go back up to Market Watch. We can prepare that, have that ready. Go over to the quotes tab and let's go here. Guys, the biggest gainer for today is Abbott Laboratories, ticker ABT. They gained 10.71% today. Their previous close was $89.27, and they closed today at $98.83. Let's pull up our calculator to do a hypothetical, and we were using $6,400 today. So if someone invested $6,400 and they got that 10.71% gain, they would have gained $685.44. Add the $6,400 principal back to it. Total investment would have grown to $7,085.44. Bada boom, bada bing. Clear this out, minimize the calculator, and let's go over to here to the Analyze tab. And we are supposed to be looking at Abbott. So if we go back to Market Watch, we select it, and then we'll be good. So Abbott Technologies is in the healthcare sector. So we're going to look how that sector performed, industry performed, and the sub-industry performed that Abbott Laboratories is inside of. So let's go over here to the Market Watch tab, go to Visualize, and look for healthcare. Take me off the screen. So healthcare is over here, guys, and I'm seeing more green than red. What about you? I'm seeing more green than red. So now we got to find Abbott. There it is. So what industry is that? Well, that's the healthcare equipment and supplies industry. Let's go inside. Hey, I'm seeing way more green than red, guys. The only red I see is Align Technology Incorporated, and they're down 1.57%. Okay, way more green in this industry inside the healthcare sector. Now, it looks like it's only two sub-industries. We have healthcare equipment and healthcare. Let's pull this over because it's hard to see. It's getting cut off. Healthcare equipment and healthcare supplies. So this part is healthcare equipment and this part is healthcare supplies. And there's only three of them. All right. So let's go back to the Analyze tab and let's talk about Abbott Laboratories before we go to their website. Here's their website. There's also a link to it down in the description. So let's read a little bit about the company. Abbott Laboratories, together with its subsidiaries, discovers, develops, manufactures, and sells healthcare products worldwide. Got it. We got it. Here's their website. Put me back on the screen. Take that down. We got the gainer there. All right. This is my first time on this website, but we're going to make it do what it do. All right. Abbott. Hello. Welcome to Abbott. How can we help today? I don't know yet. So we click that. So there's careers. I'm glad we clicked on that to see that that was at the top. I see investors. They say where to buy and about Abbott. So let's scroll over the homepage. It looks like everything that we need is going to be hitting right here in this burger. This burger here at the top that I almost didn't click on. Exact Sciences is now Abbott's. Okay, products and solutions, careers, about Abbott. We almost at the bottom of the page. For the latest on Abbott's life-changing technology, get updates directly to your inbox. Okay, yeah, I'm glad we clicked on that little thing at the top because they surely ain't got it at the bottom. So let's go to about Abbott. Okay, overview. No feedback. I don't want to get that. About Abbott. Okay, they got a little video there. I'm gonna pause it. You want to watch it? Use the link down in the description. Live your best life now and in the future. At Abbott, we're driven by a shared mission to help you live a healthier, fuller life. Abbott at a glance. Here are some stats about the company. Over 135 years as a trusted health tech industry leader, over 160 countries in which we're making a difference, and over 122,000 employees working worldwide to advance human health. A history of nurturing human potential. So that's their history, responsibility, creating the future of health together, our impact on global health, teaming up to build community around health. Got it. Awards and recognition, leadership, questions, looking for more. Got it. So let's go back to this burger. Correct me if I'm saying that wrong. If you know what that is, just tell me. That way I can add it to my vocabulary. So careers, let's go ahead and go to careers. Hey, I love the fact that if they got this real simple. Let's go straight to the benefits. Let's not waste no time. Benefits, supporting your well-being. Our mission is to help people feel their potential through health. That starts with you. Count on Abbott to support you in your career and throughout the moments that matter most to you and your family. From healthcare, retirement, and education benefits to wellness programs, workplace flexibility, and much more. Abbott offers the security you need for all the important moments in your life. Okay, so they breaking this down, guys. They doing a good job. They're letting you know if you want to know. So here's the healthcare, medical, dental, vision care, flexible, all of that. Health savings account. Oh my. So we click on that and it'll drop down and give you some more information. I ain't mean for it to open everything. Did it open everything? It looked like it. Professional development, training and development resources, key talent programs, global retirement benefits, incentive programs, insurance, leaves of absence. Man, this is the deepest, most detailed benefits I have ever seen with the companies we've looked at on the websites. I almost feel like I'm in HR. Working at the company, they gave you everything, it almost looked like. All right, let's go to investors. Oh, they got it. This is awesome. The website looked basic, but it's really simple to follow. I think the only thing that was a little hard, if I hadn't clicked that little burger, I wouldn't even seen all of that. Like if they had it already visualized at the top for the tabs, I think that's the only critique I would have. So here's the stock. This looks very basic too. Here's the stock prices. Looks like I didn't even think the chart was going to pop up. There go the chart. So there's the chart. There's the stock quote. They have some other tools. Hey, that was easy. That was easy for their website. So let's go here and talk about what I got as far as the research. And then we can go ahead and go to the to the charts so we can wrap this up. So Abbott Laboratories, ticker ABT, when it comes to their goods and services, they manage healthcare manufacturing across the medical device, laboratory, diagnostic, and consumer nutrition markets, offering solutions such as, number one, complete metabolic monitoring options, including Freestyle Libre biosensors and glucose management systems for diabetic patients. Number two, scalable laboratory diagnostic products, including antibody testing instruments, molecular PCR systems, and rapid point of care kits for clinical technicians. And number three, optimized clinical nutrition systems tailored for pediatric development, geriatric recovery, and critical medical food requirements. Got it. Looking at their S&P 500 clients and partners, notable names include HCA Healthcare Incorporated, ticker HCA, Cardinal Health Incorporated, ticker CAH, and McKesson Corporation, ticker MCK. Now, let's go to the charts. Bam, bam. And we already got their ticker up. All right. We don't have nothing. We don't have nothing. This is our first time covering them. At least we got somebody new. So we're looking at a 1-year daily chart, and Abbott Laboratories 52-week high is $137.49. 52-week low is $81.97. Let's go ahead and peek at the higher time frame. And now we are looking at a 10-year daily chart. 10-year weekly chart. My apologies. 10-year weekly chart. And I can see 2016 right up in here is hidden right here. All right. Here's their 10-year low of $37.38, 10-year high of $142.60. Since the price action is right around here, we actually have some historical price levels we can use to try to find some areas of resistance and support that this could potentially have and find. Okay. So let's hurry up and do this. Put me back on the screen. And let's get to it. Here's the price level. I'm seeing this one. Bam. And I'm seeing this one. We can use this. Bam. And I'm seeing right up in here, bam. All right, and then we have enough price action here to use the 1 year daily chart to get the rest of those levels. So the resistance I got from the higher time frame. Also, let me expand this and go over this with you. So here's the current closing price at $98.83. It's also up here. Here's the 200-week simple moving average. So it's trading below that, which is $112.29. And here is our 9-week simple moving average coming in at $91.44. Got it. Now, let's go ahead and go to the 1 year daily chart and let's try to make this quick. See? I like it. I like that. Now, I'm noticing something off the bat. Not immediately, but I'm noticing something off the bat. Let's get this out the way. Here we go. So we got our 200-day simple moving average coming in at 109.99. We have this is our 9-day simple moving average coming in at 93.79. And here's where the price closed today at, we already talked about that, 98.83. All right, here's what I'm seeing. We got a couple of gaps, guys. We have two down here, but I'm seeing one right here that it looks like that's where the price action slowed down at. So let's zoom in on where we are right now. Let's do that. Let's zoom in. Bam. All right. So here's what I was talking about. And we're going to take those boxes off. We don't need them. We go here. I'm going to make this as fast as I can, guys. So we go right here. We're going to use the rectangle tool. We need to get to the low of that candle and to the high of that candle. Edit properties. Extend this over to December 1st. So there's our December 1st. Turn it yellow. Now, the top of that zone is going to be $100.63. So is the low of that candle $100? Yes, it is. So that's right. So the bottom of that zone is $99, okay? Notice that that was a gap that wasn't filled yet, okay? So today's price action with this long wick was able to fill that gap. So that gap would have stopped today. So let me edit these properties. So we go to, that would be July 17th. I'm just clicking. I wasn't even paying attention. July 16th. There we go. So you see that? It would have been filled today. But the lower end of the gap became part of the resistance. You see how the actual close of today's candle is below the gap that it filled. The very bottom of that gap. So this is another reason why I'm starting to turn gaps into zones of resistance, because this shows what happened after that gap got filled. It closed right below that gap. Okay. Now it's gonna take a while to do that, but I at least explained it. You got the idea. So here are the other gaps that I'm seeing. We had a gap on the way down. So this low to this high. Edit properties, turn it yellow, extend it over to December 1st. Bam. So we already had a gap on the way down, right? So that's the lower end of the gap. That's the top end of the gap. Then, I was right over the mic. I hope I wasn't yelling at you. Then we have a gap coming back up. Now, here's the thing. When it gapped back up, that means that gap previously still hasn't been filled yet. So we're going to extend this out to the same day. December 1st, make it yellow. Get our price levels, put it at the top and at the bottom of that gap. So here's the bottom. That's $89.88. The top is $94.99. Okay, so we have more than enough supports. Also, you know, I like to look at the 9-day simple moving average as an area of support if the price is above it, and as resistance if the price is below it. So that's a few price levels of support that you can see right now. Okay, especially because of that gap. So the first level of support that I'm looking at is the $94.99. Okay, now we're going to pull this down and we're going to look for the resistance. Start looking for the resistance. So, okay. The resistance is that gap. And then that other price level that we had, that price level, that $100.54, you've been following along. We already know that that's around a psychological price number of $100. That 54 cents, we being technical, but that's a psychological price number that we would have to see get taken out. Okay. And the actual top part of that zone is so close to the price level we got from the higher time frame. So the actual top of that gap is $100.63. So it's 9 cents more than the larger time frame from the weekly chart price level we got. We got that price level from the weekly chart. Okay. So I'm gonna pull this down and see if we can find anything on the daily chart. It looks like this could possibly be some resistance around 103.17. You see a lot of wicks there. 103.67. I'll go ahead and put the price level there. There it is. All right. And then we can erase this, the psychological price level. All right. So that's what I got. And then we got this too. Pull this down. Let's zoom out because we got a bunch of stuff going on. I'm trying to see if we can get just what we need in there. It keep moving around all funny. There we go. All right. That way everything is in there. So I'm seeing this as resistance as well if it can make it up there. The $109.99. Okay. Because that's going to be the 200-day simple moving average. So those are my levels of resistance. Those are my levels of support. Yep. All right, now let's get the stock quote and talk about the volume. So floating data box, Abbott Laboratories open today at $95.29. They had a high of $101.87. They had a low of $94.99. They closed today at $98.83, which was a trading range of $6.88. Now, trading volume, they traded 32.7 million shares of this stock today. Now, is that a big deal? We're about to check it out. We're about to find out. Take the floating data box off. Take me off the screen. And the average trading volume for Abbott Laboratories in a daily trading session is 9.2 million shares. And today they did 32.7 million shares. So that's definitely above average. They did 3 times what they normally do. And they had earnings today. So let's double check that. Come on now, say something. Where the little floating box? Where the little floaty box that pops up when you mouse over it? There we go. So yes, they had earnings today on the 16th. Yep. So that explains it. We expect to see a spike in volume on earnings or following earnings announcements. So this earnings announcement had to be before the market opened. Yep. So it was announced at 7:30 Eastern time. And the conference call was announced at 9 a.m. Eastern time. 9 a.m. Eastern time. Okay. So we got that, and we can talk the previous volume, this candle right here, that came in at 16.4 million. So that was above average as well. And then today it doubled that. Got it. So let's put me back on the screen. Let's talk about the volume percentile. God, so out of the most recent 252 trading days, guys, today's volume was higher than 98.8% of those days. To be exact, only 3 of those days had higher volume than today. Guys, we did it. We did it. Thank you guys for tuning in. Let's go here. Let's go there. Let's do this. And we can wrap it up, guys. Yes, we can. Show enough can. Show enough is and can. There we go. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me tonight. This Sunday, July 19th at 9 p.m. Eastern time, we're reviewing this week's biggest gainers and losers, market sentiment and volatility, S&P 500 index sector performance, and creating a watch list for the week. And make sure you keep tuning in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.